Okay, good morning. My name is Daniel Elroi. As Eric introduced me before, Eric and I have been presenting for many years at these terminal management, also the facilities conferences. I'm a frequent face at the AAPA conferences, and so are some of you. So in case you think you're going to see the same slides over again, I never do the same slideshow again. So, and in fact, today I'm introducing, I think, a new term. It was new to me, maybe it's not new to you, and that is spatial accounting. What is that? Managing your physical and financial assets using map-based dashboards. So a little bit of a new twist. Let's see how it comes out. So let's get going. Yeah, blah, blah, blah about me. I've been doing geospatial and GIS for about 30 years and have somehow turned out to be one of the handful of subject matter experts in the deployment of geospatial technologies in ports today, which is a lot of fun. I think I've visited 45, 50 ports in 7 countries, and it's been a nice thing. We're a very specialized company just up the street here in downtown LA, and very much an integral member of the ports industry. These are port clients of ours, and I know Eric as a client, and Willie and Nick and other people. And as Eric said in the introduction, from the very largest, from LA and Long Beach, to some of the smallest, Port of St. Helens, Oregon, I think have 12 people in the office. Wanimi has 25. And we've learned a lot. We've put in, we counted recently over 60,000 hours, labor hours, on projects like this in ports. So whether it's command and control, security, video, strategic planning, asset management, cover a lot of things. So that's about us. Let's talk about you. And a lot of this will be visual, so you're not rude if you're looking over there, please do. All of you are here because you have, in some fashion or another, a terminal to run. But then you sent in the inspectors, and the inspectors went under the deck on their boat, and they found rust. And pretty soon, all you can see is rust and more rust and more rust. And pretty soon you can't see the forest for the trees because everything is urgent, everything is expensive, and your engineer is sitting there saying, it's broken, it needs to be fixed now. And he says, we'll have to stop operations if we don't fix it. And the operations say, but we'll have to stop operations in order to fix it. And safety says, somebody is going to get hurt if we don't fix it. And real estate says, we're not meeting the lease terms if we don't fix it. And David, wherever you are, says, the CFO says, but it's not in the budget. And of course, management, somebody tries to kick it down the street and says, we should have inspected sooner. But at the end of the day, you still hear this message, it's broken, it needs to be fixed now. And we say, stop, ask questions. Engineering should ask the questions. I'm not telling you anything you don't know, but nonetheless, engineering should be asking, is the condition actually deteriorating, or is it just that we missed it, or there hasn't been continuity in the inspections, so we don't really know if it's deteriorating? Is there enough redundancy to be able to absorb the failure of a pile or whatever it happens to be? Operations can say, can we just change our operating scenario to make this unnecessary? Can we just move people around, do something different? Real estate says, can we just move the tenant? Finance says, do we even want to keep this asset? Is it valuable, this entire asset system? Do we even want to reinvest? Okay. Well, the answers to these questions, if you look at them as a whole, come from many different places. Engineering reports, original as-built, repair records, which are often in paper, document management system, or you don't have one and it's just CAD drawings on your file folder, work order system, GIS maps, asset registry, all these different places, your ERP. That's a lot of data. And that is if all the people on the port got together and the decision wasn't just made in engineering and maintenance. But if the question was actually asked by a committee or a steering committee or a council, they have to consider this. How will you keep track of all this information? How will you manage it? How will you analyze it, present it, and record the decision? Which is why I'm here. That's why all of us are here, because we have an answer to one of these problems. I mean, they're talking about logistics. I'm talking about engineering, real estate, more static information. So the location-based spatial approach would have you combine data from different sources and formats in such a way that they can actually communicate to each other. But better yet, put it on the map. Why are we putting it on the map? Because a lot of this information is very hard to correlate to each other unless you can see where it is and how it overlaps. And this kind of multi-layered view that you see on the right is key to the spatial approach, because you can map 1 or 2 or 20 different layers that are pertinent to your decision-making process. You can have your terminals, you can have your leases, you can have your utilities, you can have your short-term leases that Eric was talking about, and your long-term leases, environmental remediation sites, all these different things, and then connect data to each other. The spatial approach is the relationship between these layers is very important, because if you stack them in layers, you can see the relationship of one thing to another, which may not be obvious if you're just looking at spreadsheets. Okay, and data connectivity is key to this approach, and so is time awareness. When did this start? When did this stop? This approach leads to connectivity and integration, because if you map, for example, at the top layer, your leases or your available land, you can connect that to your lease management system, and then you can get responsibilities for repair, for instance. Or when is this lease going to expire, so that I can make decisions about repairs? You can connect it to your billing system so that you know what your revenues are. You can connect it to your financial system so you know what your liabilities are, and on down the line. So this is important because it helps accommodate rapid changes in ports. People love this series of slides, so take a look at this. This is the past 25 years here across the water at the Port of LA. So just watch this. Look at the amount of change over 25 years. Land becomes water, water becomes land, warehouses become yards, yards become terminals, terminals turn back into dirt, right? How are you going to keep track of that over time when you're looking at assets that have expected life of 20, 30, 50, 100 years, unless you can put it on the map? So once you have this approach, you can create visual dashboards that are data-driven. You can map your layers, assets, properties, utilities, land, water. You can connect the data to it. And because of that, you can connect data that otherwise has a completely different frame of reference. Work orders very often are just, what's the frame of reference of a work order? It's some asset ID. Do you know where that asset is? Well, yeah, maybe I know where the manhole, the pipe, or the oil water separator is, but where is that in relationship to anything else? Well, your properties are often related by address. Your inspections, maybe by GPS, or your environmental work is an XY coordinate because somebody took a GPS data collection like you're doing in New York, right? XY. The as-built are often done in CAD, and especially in the older days, they were in a local coordinate system. 00 is here, and here's our port. Whereas if you go to AIS, aerial photography, UAV imagery, it's in a global coordinate system. So you put it in the spatial view and you bring it together. Now I'm going to run you through an example. If a port had a system like this, and I know a lot of the ports here, many of you have some component of this. None of you have the whole thing, because really the whole thing is kind of like nirvana. It's a ever farther, sort of destination. It's not reaching the destination, it's the journey. But if you had something closer to that destination, this is how a decision about a failing asset could look like. So let's start with a port, and let's start with condition assessment. Suppose that all your condition assessments were not discrete paper reports generated by 3 or 4 different contractors that had won the lowest bid this year versus 5 years ago, and it all went everywhere. Suppose everything went on the map, And you could click on any one of the inspections, and on the left, you can't see it, it's small, is a database that says who inspected, when they inspected, what the conditions were. In fact, why don't we visualize it? Why don't we use color codes to show the condition of some aspect, the underdecking, the condition of the underdecking? And you can see over here on the right, we have red, and here we have green. Bad, good. What if we then switch to see some other aspect? Maybe the pavement on top, or look at the whole rating, the overall rating, and do it in an equal fashion so that whoever is inspecting is feeding to the same data structure, not just today, but in 5 years or 1 year, or whatever your inspection cycle is. So let's focus on this area over here, this red, because that is one berth that is giving us trouble. Now, in a siloed fashion, the engineer or maintenance manager would come in and say, we have a report, there's rust, piles are failing, we need to go fix, okay? What if you could click on that and get your past condition assessment so you can do a time-based comparison and see what is the rate of deterioration? Maybe it's been deteriorated like this for 20 years. Maybe it hasn't gotten worse. Maybe it was just a result of a vessel hitting a fender or whatever it is that we're looking at. Maybe things are okay. So what if you could do it on a map with a database? What if you could bring up all the original documents associated with that, no matter who performed the inspection and then the assessment? But don't stop there, because all we've shown here is how engineering and maintenance can be more efficient. Let's make the decision as an entire management group and use spatial accounting. What does spatial accounting mean? It means managing both physical and financial assets together, including real estate, because that's many ports' main asset is real estate. It's not, other things that we think of as typical assets. Bringing it all on the map. So let's take a look at that. Suppose that you can connect your billing system and visually, very quickly, using colors or numbers or whatever, see, that's my top earner there on the right. Now remember, the area of engineering concern is this kind of rectangle over here, right? So just keep an eye on that as we go through this. The billing system says that's our top earner. But by connecting to our lease management system, suppose we had one, or if we don't, feed it into a system like this, then we can divide revenues by area, and we can see our most efficient earners. Okay, so the one on the right makes most money, but this one is more efficient because it makes money with less land. It's more densified. Okay, here's a surprise earner. It didn't show up as a high dollar earner before, but relative to its size, it's a good one. It also highlights the losers. And if we're looking at our area of concern, we see by color that this one is not doing so well in terms of revenues. Let's continue. If you have your work order system, okay, and who was it that was putting in Maximo? Somebody said, yeah, okay, New York, right? Okay, if you could connect that, realizing that Maximo is not working, is not connecting to the same data, it's not to the terminal, it's the actual assets, but in the spatial way of looking at things, it can aggregate it any way you want. Then you could map the cost of maintenance. So here's an expensive terminal or berth to maintain. So is that one. And I didn't highlight any ones of the ones that are cheap to maintain. The ones that are not actually rented may not be that cheap to maintain because you may have to continue maintaining it regardless, or you may be in the habit of maintaining it even if it's not generating revenue, okay? So if you subtract expenses from revenues, you get a profit and loss statement. Except in this case, it's a visual profit and loss statement. So if we look at our problem area, we see that, I don't know, 3/4, 2/3 of it is actually losing us money every month. So before we rush in there to fix something, let's take a rational look at what it's costing, making us or costing us. But let's not stop there. Let's go to, oh, I'm sorry, I had a little more bubbles there. So the good cash flow terminals are on the left there, and on the right is the best one. And then you look at the ones that are troublesome. I was getting ahead of my slides. Okay, don't stop there. Look at your asset registry. Look at long-term value, depreciated value of your assets as asset systems, not just as individual assets. And you'll see that this particular terminal there is valuable, whereas that terminal is not. Now here comes a tricky part. Quantify all your liabilities. So you have your regular liabilities like bonds and financial commitments, but you have your other ones: environmental, social, visual, all these other liabilities that are qualitative, right? You have some hulking, rusting something on your terminal, and the public doesn't like it. So that's a liability, and if you can get rid of it and maybe put a boat ramp there for your surrounding citizens, you might be able to do something else. So if you can quantify all these, add those all up, you can again see the terminals with high liabilities and the others. Subtract one from the other, and you have a balance sheet. In this case, it's a visual balance sheet. It could have been that when we're looking at that trouble area, things could have switched here. It could have been a cash flow problem today, but it may be all paid off. Things might be in good shape. So you may actually have a positive net asset value there. In this case, you don't. So, and we see this one has a good asset focus on cash. Right, actually, it's important to bring up the bubbles here. So the blue one in the middle is a good asset, but if we looked at the profit and loss, it just wasn't generating. So let's concentrate on making sure we get good revenues there. If we look at this one, it's a negative. So that would suggest we should just get rid of it. It's a liability and it doesn't earn us cash. This one over here, if you remember, that was a high earner per acre, but we also have problems there in terms of liabilities. So it's neglected, and that's where we should focus our monies to repair. But we're not done with answering the question about the engineering failure. So what are we going to do? We're going to get together with real estate, and we're going to bring up all the leases. And by the way, let's bring up all the utilities. So here's our electric and water and storm drains and all that. And let's sit down with the tenant now and say, look, you are over here. Because remember, this was not rented on the right. This one on the left is rented. Here's all the lease abstract, so we know when their lease is expiring and how much they're paying and all that. And we go to them and we say, look, our engineering studies show that about a quarter of your deck, of your dock, requires repair. And we need to do it. It's per our lease, but it's going to inconvenience you. So tell you what, let's negotiate. We'll go fix this over here on the right. It's not occupied, so let's fix it first. Then we're going to move you over there. We'll pay for it. Okay? We'll move you over there. Then we'll go repair this. But I tell you what, since you're already on the right side here, would you consider extending your lease to this vacant lot? Because if you do, and we'll give you a good deal, it solves a problem for you and it solves a problem for us. And if we can get that leased, then we can take care of the other liabilities that we know already exist there. And before they, so basically do it in a phased fashion, right? We'll repair this, we'll move you, we'll repair that second. And by the way, here's our proposal, all from the same system. So data, maps, documents, all in one place. How does that sound? I mean, other than utopia, how does that sound? Sounds good, right? But people said yesterday, well, sure, it sounds good. Management always says that, this goes beyond strategic asset management because now you're looking at an entire enterprise. So is this magic, sleight of hand, or good science? Well, obviously, I would say good science. To implement this, you need all these different bullets. You need governance, which means sponsorship and involvement from steering committee and upper management. You need the right staffing and processes, and on down the line to, of course, data and software. We talked about silos. I actually, I like, and we use the word silos. To implement a system like this, you really need organizational maturity. You need trust between really the slices of the orange. Why slices of the orange? Because all slices are part of the same orange. In silos, it's really, you don't have There's no dependency between silos. Here, there's a strong dependency, right? But you need the different units, and these are the typical units that would participate in this. There are other units in the port, but these are the typical ones: engineering, real estate, maintenance, ops, and so on. You need to develop trust between them. You need involvement. You need integration. So who has done this? You know, Eric rightfully brings up, you know, Willie from Vancouver and Hank from Rotterdam and Mick from Melbourne as the examples. And here we are sitting in the United States going, oh, that's nice. Are we ever going to be able to do this here? So I looked at the ones highlighted in yellow, actually, to the best of my knowledge, and I've met with these people and talked to them, even in these ports where they have made more progress, it's not all slices of the orange that have been squeezed into one system, or orange juice, whatever that analogy there is. It's engineering, it's maintenance, sometimes it's finance, sometimes it's real estate, sometimes it's IT. It's usually 2 or 3 leading departments or divisions that make this happen, okay? What's happening over here? Well, Eric had a much longer list, but there are ports that are moving forward in that, and as I said before, I know many of you, and you have bits of this happening. I want to give you an example, however, of a small port. Well, they would be offended if I called them small, but relative to where we're sitting, we're small, okay? They are, so Longview, Washington, right on the Columbia River, just northwest of Portland, is one of our clients, so we know more about them. They've embarked on this, and I want to show you how they got there, because that's really the question everybody has. Yeah, nice ideas, nice slideshow, how do we get there? Here's the path they took, and they basically started in 2014-15. They probably budgeted for it in 14. In 2015, our illustrious friend Eric Stromberg, he shakes his head, did a strategic asset management plan for them, for the Port of Longview. They accepted it, they adopted it, they put it into the 2016 strategic plan, which means they did it pretty quickly because the plan was probably adopted in 2015. That led very nicely into their final budget for 2017, which led to an RFP in late 2017, which we bid on and won in 2017 and started implementing, I think, in January. And here we are in October. Their first phase of their project is done. Now, somebody said yesterday, it's not about the software. I don't think they said stupid at the end of the sentence. It's about the people, but that's the message. It's not about the software, right? It's about people, about collaboration. But software cannot be ignored and data cannot be ignored. What they have in place, and I'm not going to go through all the software names, but they have a GIS now. They had none a year ago. They have a work order and asset management system, which the distinction was nicely made yesterday. A facilities management, or as Eric Fan said, a management of assets is not asset management, right? I prefer to split the 2 terms into facilities management, that's work orders, and asset management, which is the financial side, okay? So they have software to do both. They didn't have that. Document management system, they didn't have that either. All that is in the cloud. All that is by subscription. They didn't have to invest, you're asking. They didn't have to invest in any hardware or people to run it. They just have to invest in training and processes. And in phase 2, they will link to their Microsoft financial system, their ERP. And in future, they also want to link their lease management, which means move their Excel spreadsheets basically into this cloud-based system, as well as their inspections. And they have a 3-year plan. So they can do it, and they'll get there. So the question is, if the 44th ranked port, 2016 figures based on cargo volume, if the 44th ranked port in the US can do it, why can't yours? Well, we're not going to answer the why not. The question is why yes. You can do it if you believe that information is power and not a nuisance. If you believe that information is an asset and not a byproduct of an expensive engineering project, that information and data is integral to any, asset you can touch and feel. And you can do it if you as an organization has the will to deploy an enterprise-wide system, because this is not a system run by one department on their PC in the back room. Now, how high up the enterprise and across all the departments do you have to go? Well, everything is gradual, but you have to have that vision that for this to work, you're going to be talking to different people, some of whom are more welcoming of change than others. Okay, I need to speed through the rest of this. You have to identify your drivers, whether those be facilities maintenance or finance department, real estate or development. You have to develop the governance structure early on. And I have just 3 more slides, I think, on practical considerations. The first one I have of 4 bullets here is the right question, what is the return on investment in doing this? Or is the right question, what is the real cost of making decisions in a vacuum? Because I remember I asked Eric Fan yesterday with the whole thing with Ports America leaving and all that, and he said that the question is not, can I pinpoint an ROI on it, but what's the cost of not doing something like this? Second one, how much transparency and decision-making are you expected to provide your stakeholders, commissioners, or shareholders? Because I know that there are private terminal operators here and there are port authorities, so different people that you might have to be transparent to. How will you capture the knowledge and wisdom of your retiring workforce? Crucial question right now, 2018. I've heard just terrifying, we all know them, I'm not surprised too, but just the magnitude of the number of people retiring in the next 5 to 7 years is terrifying. Not to those who won't be retiring, that is. And how will you attract the next generation of your workforce if you do not run a smart terminal or a smart port? And that is a very important aspect to the AAPA, in that it is trying to help bring up the next generation, make sure there is a next generation of people to manage and run ports. Strategies for moving forward. Maybe we can leave that for the Q&A, but there are some bullets here. Decide what your assets are and what's important. We talked about that yesterday. Your key wall or your berth is the most important, but so is real estate. Maybe real estate is easier because there are not as many parts. Maybe you should start there. The grant programs, we built a lot of our initial systems using Homeland Security grants and then expanded it to the rest of the port. These days, that's not unfortunately much of a source of funding, but construction and infrastructure replacement is. So that could be another, or the regulations I talked about yesterday, the need for transparency. So in some states like Washington, which is uber transparent, you have uber demands for information management, right? Just as an example. This bullet, accuracy or the lack of accuracy. People always ask me, well, that sounds like a nice system. How are we going to build it? How are we going to maintain this? And one of the questions that needs to be asked is, does it need to be 100% accurate for it to be useful? And the example or the parallel I draw is, if you don't own a car and you have to walk everywhere, do you have to have a brand new BMW, the ultimate driving machine, Eric, or can you have a used car that has a little bit of play in the gears and the transmission? It will still get you to where you need to go a whole lot faster. So just consider accuracy. And then the cost benefit of cloud computing as compared to all the scary talk about cybersecurity. I'll stop here.